Yeah, it's just you know, kind of boilerplate to make sure that you know, no one gets dragged off into court or something like that. It happens. Yeah. Oh man. Yeah, Aaron, your voice is sped up again. Yeah. It'll be interesting to see, how everything proceeds in the future. But it's like you can't be too careful in what we call the nation of litigation. It's sad, but it's just something you got to kind of cover your CYA on. That's it. Speaking of which, I am live on YouTube, but I have everybody in the background muted. So if you're joining us on YouTube and you missed the other side of the conversation, we apologize. We just got to make sure everybody's covered. All right, price action is awesome. Target 2 was met beautifully. The extension was met beautifully. Now we're right at the cusp of the open, and we'll see what happens. We'll either A, enter this liquidity zone and blast through it, or B, reject it and come back down to the pivot and range for a while. Hell, it could even do both. You can run that whole zone and come back down here in range. It is. It's got some range in it. It's what was it, 393 to 395.80, 395.75, somewhere in there. There you go. You know, now there's an FM radio voice right there, man. You got it. Woo. Correct. Oh yeah. Woo! There we go, XPEV. Nice run. Saw that one. Here comes our bank right back to 28 bucks. Should be hitting 30 real quick before it halts. I'm almost expecting a halt. And we're in liquidity, so we're likely to at least proceed to the halfway point, which is about 394. I could be wrong though. Sometimes you divide these into thirds and quarters and all that stuff too, but I think 394 is within reason. Plus, that's where our extension line from this rising channel goes to about 394.15 with price up here, as long as it stays above regression. And regression, we know, is the go-no-go line for the rest of the pattern. Damn, XPEV just skyrocketed, dude. Look at that. Woo! Love it. They're announcing earnings. They were supposed to announce them before open, but I'm guessing they announced it on the bell. Whatever. Watch that thing halt up a couple times, huh? Oh yeah. That too. But the other thing is, and I don't know what it's like to get a driver's license in China now, but I know we were just talking about that in the 90s. It was like damn near a lottery system to get a driver's license. Right, like nobody had cars. They had like mopeds and bicycles. And everybody else rode public transit. FRC, come on. Hit that $30 bill, y'all. Oh, cool. Oh, yeah. Whew. That is pretty nuts. It sounds like the logical thing. No. Right. Why not? Yeah. Might as well bring all of the key dictators into one place and get them on the same side. Right? That's the thing. Like everybody's a bit worried about, World War III with China and Russia on the same side, but strategically, two military moves could put China out of that fight. Well, with the amount of farmland that they have to support the country, they're importing a lot of their food. A lot of their food. And, you look at how much we export to them, we're basically feeding them. And also, the farmland that they do have that is not capable of supporting their population. If they were to ramp that up, they would need lots and lots of fertilizers and things out of Russia. Well, it'd be pretty easy to block that. And that's the move too. You block those two things, you can't have an army if you can't feed them. they work on their stomach. Yep. And then boom, no more war. And then to boot, you got to wonder with Russia, they've got a lot more resources, so they could rage on for a long time. But you just basically cut them off from each other, and one hand can't support the other, and eventually both hands will fall. Hopefully not. But, I mean, it's kind of what if, Wow, there's your halt for FRC, halted to the downside this time. A bunch of people sold it off. Well, of course. Yeah, it was kind of expected. I was thinking 394, hit 393.75, close enough. And then we're back to the pivot, which was originally the extension target from our double bottom breakout. Now we're just resetting off that pivot, it looks like. So we've created our first liquidity zone on the 1 minute chart. I'm not going to mark it because I've got two pivots here already. But we know it's about right there. So last night, if you were watching, I kind of drew into the close this little mini zone right here. And that was where I was expecting a sell-off. So when I said something about the cup and handle breaking out, it broke above this. That was just a very quick three-pointer. But if this were to break out fully with a measured move, it could set up a 20-point up here to 398. So we could actually hit that today. We could get right through this liquidity zone and run up to 398. That's kind of where all of the options expirations are kind of accumulated in that range, about 398. There are some that were sold up here to 402, 398 is about where the expected move would be for max pain. So we'll see what happens with this liquidity zone. If it runs through it really quickly and breaks out of it, that's an easy target. If it accumulates in this all day and doesn't go to it, we could expect a volatility run towards the bell, possibly going from 393 up to 398 very quickly. Or if it rejects, it can go from 394 straight down to 388. So we'll see where the volatility takes us. But we know that there's one key factor that we have for a secret weapon, our diamond pattern. It always defines the range very well, and that 388 pivot goes right through the stinking middle of it. So if we stay in this range, 398's on the table, 402 is an extension possible. The other side of that is a breakdown, and we run 388. If things get really psycho, like the banks melt down and everything hits the fan, 382 is the next pivot. Pretty simple stuff. And look, the diamond says that. Here's Friday, Monday, Tuesday, Wednesday, Thursday. That's FOMC, isn't it? Look at the range in that move. That is massive. So if this diamond plays out and gives us that range definition, we could expect some serious FOMC damage. And if the Fed pivots, long term, we could see some serious issues with, going into recession, so to speak. Finally. Oh yeah, and it's right in our big liquidity zone, right? So this is our diamond. It's hard to see because it's a choppy ass diamond, but it's still there, and it just defines that channel, and then this channel too. But every time it hit a regression line, whether it was on the bottom or the top of that channel, reaction. And this is that whole point of that statement I pinned in the chat there. That lizard brain doesn't predict, it just reacts. So when you see these, you know where your predictions are based on previous engagement or previous encounters on the chart, that DOPE. You go and you find these lines, and you just got to know when to react to them. It's like I said, it sounds a hell of a lot more simple than it actually is to do. But once you get that lizard brain trained, it just knows how to react. It's just, it is kind of that easy. Because it's broken. You had to look at it last week to see today. You can go instead and go look at open interest and find where all the open interest is congregated. There is. And if you just do OI, hey, yeah. Well, I don't want to say we lost him. He'll come back and visit once in a while. He is basically graduated. He is a very profitable trader. I have a strange ability to be able to trade while I'm moderating. Not everybody can do that, and he can trade very, very well when he's not moderating. So at some point, his time becomes very valuable. Also, he's teaching some people in his family how to trade. So, in a sense, he is I call him Master Stone now because he has exceeded my abilities. He even trades price action much more easily than I do. And that is, I'm not going to break my arm, pat myself on the back to say I was part of that, but that feels really good to be able to know that I had a hand in helping him become a very successful trader. Absolutely. Absolutely. Yeah. Yeah. Yep. You can still message him. You can still visit. I think he still has Stone's place up, so you can still visit there and see what he's doing. And also, you can message him directly. He usually will respond at some point. He may not respond during trading hours, but like I said, his time spent trading is highly valuable. Yeah, I mean it's one of those things. It's like you've got to sometimes you build something like that and you just gotta run with it. So it's understandable. It's great that he's been able to bring forth all of that wisdom and pay it forward, and that's all we could ever ask. He doesn't have an obligation to be here for the rest of his life teaching people how to trade. And I respect that more than anything because I can see, like, when you make that kind of transition where you're just able to change your life literally, it's the only thing you're going to want to do, you know? Right. Yeah. Yeah, he sent me right. He sent me a message yesterday. He said he got a total of 24 points on the ES yesterday. Yeah. So I mean, you see what I mean? It's like, what would you rather do? I know it sucks because it's a lot of wisdom in that one. He is very smart with this stuff, and he's figured out a system based on a combination of other systems, and he's been able to filter out the most important parts of it and make it work for him. That's our purpose here. We're a collective. We have a lot of different ways to analyze price and to trade it, and it's up to you guys to pick the bits and pieces that work best for you, put it together, and make your system. You design your own method based on a bunch of parts that you can pick off of a workbench, so to speak. All right, we got a little ugliness here. This is a little double top action, and we're breaking that pivot. There's your target 1, target 2, extension to the 392 pivot. Watch for a wick at one of those points, though. And we might have a little double bottom forming on FRC over here. There it is. Bam. R1 met. Target 1 is up here. 38.37. Probably take profit at 38.25. Or sorry, 28.25. Oh, I'm still in it. Yeah. Let me throw it up there. I'm going to get rid of XPEV in a moment because that was a already done deal, but there's a pennant here, so I'll flash back to it later. Dang, it does that to me every time. I got to let it catch up and then hit enter. Still holding 30. Well, sometimes I just mistype it and bastardize it, but same. So it peaked at 30.56 today with a wick. That signifies there are sellers here. That is a liquidity zone. So if we can... I believe so. Yeah, it's probably dead. There's no volume in it. So yeah, it'll move to the next expiration. Do you have one in the previous expiration? You should probably close it. You don't want to be the last one holding it on expiration. Unfortunately. No problem. Right. That's a good idea. Yeah, you got to pay attention to those rollover dates. I usually try to get out of them a day or two ahead of time, like everyone else, because I noticed that the price will vary between the two expiration dates too. So like you'll have some weird price action on the constant contract that doesn't jive. So it's best to right. Aha. Yeah, that is nutty. There we are. There's our liquidity zone for Intel Corp right there, that wick on the daily chart. So if we can crush that zone, the wolf wave is still valid. We can still see, $35, $36 a share. It's got a long way to go before it gets to that liquidity, and there's probably a whole bunch of sellers waiting right there. So definitely, I may convert some more of that position and sit on the residuals because I have strikes between 35 and 40. I can profit greatly from a bunch of that now. It's up over 170% for the total position. But I can convert some of it too and sit in butterflies too, just like I did with Tesla. But I'll watch this pivot real closely. I'll see what happens on the 1 and 5. That's a big ass zone, guys. It's only 80 cents really, but it's still valid. There's going to be a lot of limit sellers there. AMD, I have a target at 100. I think it damn near met it yesterday. AMD was easy. Got within a quarter of it today. But the daily, I mean, look at that. That's just your 50% retracement of the channel. Easy peasy, just like Tesla. Blam. It could still hit $100 today, but I don't care. I'm out of that position. I did really well with it. Now it's just wait for the next setup and find something else to trade. But it will be interesting to see what Intel does. All right, there's a hammer spy. Nice, right on our extension pivot. Whoops. The app is kind of lagging a bit there. I've noticed that Webull does have a lag that happens on highly volatile days, so it'll kind of be clunky. It still works, it's just slow. Yeah. This is Webull. I love Webull because the charting is so nice on it. I can't pass that up. That is such beautiful charting. I wish all brokers had this charting with a few more things, but I'd love to have a quadrant tool on it, but I could do without it. Yeah, just for me, I'm a frugal guy, so like I hate paying subscription fees for data. It's free, 100% free, and I've rarely seen more than a 1 second lag on it. Like comparing to some really high speed, high quality brokerages. Like I have friends who are institutional traders, and comparing data, it's like rarely have I ever seen more than a 1 second delay on a quick data change. Like I can watch the 5-second chart candle for candle, and I'll see like maybe a 1-second delay at most. Yeah, yeah, you can paper trade equities with real data, and you can do it with options. There's a little trick with it. It doesn't let you do spreads for paper trading, but it does let you do direct options positions, so single legs. And the weird thing is it'll display data that's 15 minutes delayed on options, but when you go to make the paper order, it'll show you the bid ask. So then you can just trade with the bid and ask. So it's kind of cute that way. Makes it harder to pick what strikes you want. But once you open them, you can see the bid ask on them, and that's accurate. That's to the minute. Yeah, no problem. And it's a great one for paper trading. I mean, also, I was talking to someone last night. One of our members was reaching out to me to get into learning price action. I always recommend, like, literally throw a $20 bill at a Webull account and go find a 10-cent stock that's trading, with some volume in it, where it's got some price action that you can read and you can start drawing on the chart. And as long as it moves, when you think about a 10-cent stock, a 1 penny move is a 10% swing. So like you're going to trade them in fractions of a penny sometimes, but you're going to learn price action with real money, and throwing 1 or 2 shares at it just to trade it for the experience. That's all you need to do. And it's like paper trading, but with real money. And yeah, well, I mean, this is their charts on the desktop. The mobile charts are pretty good. Oh, TOS, yeah. I don't have a TOS account yet, so I will probably still be doing my charting with Webull even when I do. But once I open that account, I plan to open that in the first week of April. I'll be using TOS to trade my larger account because it's going to have a lot more stability. And then I will probably use. I'm thinking I'll either use TradeStation or Tastyworks for my futures trading, and then use the TOS to sell the bulk of options that I'm going to sell. I'm going to plan on doing passive strategies with options on that more than anything. And I'll still actively trade my Robinhood account with spreads because that's just downright fun. You can. Oh, can't. Okay. Sorry. Yeah. Um, Good to know. All right, there's Intel back above the pivot. Bud was saying he had to pay for data on that. I don't have to pay for data on my Webull, but I am also a beta tester. So like if you sign up for beta testing, oftentimes they'll give you that stuff for free. Oh, for options data. You do have to pay for live options data, and it's very cheap, but their price data is on point and free. Yep, that's what we're expecting, just chop. This is a quad witching day, and every piece of movement you see is going to have a lot of volume in it. You'll get good solid bars, but it's going to be just choppier than all hell. This is a great day for day trading. It takes a little while to get that down, but man, when you do, the price action becomes a lot more readable. Oh yeah. Yep, because look at every 1 minute bar over here. I mean, they're clean, big bars. You get a doji. You got lots of volume in these moves. So like here, we're expecting a pull down right to this pivot. Easy peasy. It's a challenge, and if you're not, in a place where you can be very, very nimble, or you're just not quite up to speed with that yet, try it with paper. Just kind of stick with paper, because it's going to be a learning experience one way or another. I certainly wouldn't take massive size on a day like today if I was still a rookie trading chop, or if I didn't have the experience to go and nail these on a 3-pointers on a 5-second chart or something like that. I would certainly just do small positions and try to read the bigger moves. I wouldn't really try to mess with 2 and 3-pointers on a day like today. I would go for like the 5-pointers, but I will only do it on a very clean setup. Like here we had a nice little double bottom. Broke R1, so the trade was from here right on up to the next high. Bam, there's your quick little 5-pointer. Bam, look at that volume. Nice. Yeah, baby. That's just what we're going to expect today. That's just how it's going to be. It might be. It'll be pretty flat for news today, but you'll get quite a bit of just random chop. It'll seem random, but you'll find the setup. Like here was double bottom within a wedge, right there. So. So this line here, this is an old fan line I extended. Bam, right to target. Oh, Michigan, okay. The consumer sentiment. Yeah. Yeah, I'm not sure. Well, if they're not going to raise the rates, the value of the dollar depreciates, so the market moves up because things in it are worth, more dollars. Right. All right, Intel working a Wu-Tang here. Maybe we'll get loose and start heading up to the 30-50 zone. Boy, that'd be cool. FRC kind of hovering around. Hasn't really absorbed this $30 billion yet, but we met our pivot. That was our 50% retracement. Now we just consolidate. If we blast through that, cool. This thing could be a bull, and this could be a big-ass double bottom altogether. If not, well, we can sit and wait for the next setup. And if it closed the full bar, I'd just go and mark out a price target to the next bar and trade from A to B. And it'd be like hovering over that, that sell button, quite literally. But if we get a quick bar through here, we can expect it to go at least into this range. And hell, you can consider this to be a big liquidity zone right here, that whole wick. It'll probably halt when it does, though. All right, Wu-Tang just broke R1 on Intel. Primary target is going to be about 30.40 if you're scalping it. I've got a swing trade on it, so no need for me to scalp. I can just adjust my position. Numbers are bad. No one wants to buy, i.e. the rates are working. Bad news, good. Yeah. Well, we're about to that, just about. Right. Because if the Fed pivots next week, that's where we're headed. They'll let the economy, crumble down and absorb all of this. And eventually everything flattens out and then values start to kind of find some steady ground somewhere. The predict, right? A bunch of the institutional traders in that other chat are like, it's time to just go drink. That's funny. So at some point, I wanted to kind of mention this. We're looking to do some collaborative stuff. Well, we have been doing some collaborative stuff with Money.net. And at some point, I want to take and set up an agreement with them to rebroadcast some of their data, because they have some valuable data, dude. It is really cool. I can give a quick preview of what I'm looking at right here, just kind of in the chat or in the screen. Let me pop it out first. So like I get this thing, and this is incredibly useful because you can see the moment news pops out and you can react to it really quickly. So if you're looking at price action and you want to confirm something with news, you get it here. Sometimes you'll see something pop up where, like earlier in the week, it mentioned movement on the FRC, First Republic Bank. As soon as that popped up, I was ready to scalp it. It was really that quick, and that news comes out here before it ever reaches Webull. It sometimes takes about 15 minutes for it to reach the full news cycle out to all the different chats and brokerages and all that stuff. But if you have this terminal, this is really useful. And they also have a chat that's live with a whole bunch of mostly institutional traders. Their focus is mostly B2B. But the data you get from that is going to be able to analyze what a lot of these institutional traders have for sentiment on anything in particular. That's going to be very useful. So it's a great data hub for finding stuff that you need to know if you want to be ahead of stuff in the market. That's about the quickest news thing I've found. I'm going to pop it back in because I don't technically have permission to use it yet. So what we're going to try to do is we'll set up an affiliate with them, and we can refer to each other. A lot of times you'll find newer institutional traders will need some instruction on trading price action. So the trade-off is they come here and learn how to do price action, and we borrow their tools and come over here with data. So what I want to be able to do is say powered by or something to that effect. Money.net for being able to put that news ticker up somewhere on my screen here. And then, if it works out, we could provide at least the data points from their site in our stream if we needed to, and that makes it kind of free to you guys. And if you wanted to, sign up for an account with them, the affiliate deal would be able to provide a significant discount to that service if you wanted to just subscribe to it. So it's just kind of trading services and kind of promoting each other, but more or less being able to bring a lot of those tools to our members, as well as bringing our education to their members. That's it. It's been a pet project of mine. I make a weekly appearance. Well, today I make a weekly appearance on their YouTube channel and their live feed that goes to that service. I know their YouTube channel doesn't get a whole lot of views, but their live service has quite a lot of membership. So it goes straight to their live service, and somehow they care about what I have to say. So I've been approached at doing a little bit more collaborative work with them. So I think that can be very lucrative for everybody if I just make a deal. Yeah. I haven't yet. Was it? Oh, that's rough. Yeah, I'm not gonna click on that one then. Yeah. Oh, that makes it rough. My module disappeared. Where did it go? I'll find it later. There it is. Cool. I had to put my news module back into the service over there. But yeah, that's the thing I'm going to look at doing is doing more collaborative stuff with them, and in the process, getting us better service. They're not spammy. They're not going to reach out and ask you to buy 7 different things and subscribe to this, subscribe to that. They don't do any of that crap. Also, just like we did, they're in the process of revitalizing their website, so they're going to be able to do a lot more things a lot more efficiently very soon. From what I understand, they're becoming quite popular with the institutional traders, so that's going to be pretty neat to be able to be collaborating with institutional traders like that, for one. 2, some of them are interested in learning price action. Not every institutional trader sits in front of a Bloomberg terminal and makes decisions based on what it tells them. Some of them actually do go out and scalp things. Oftentimes they'll learn price action for the ability to operate hedge funds where they're taking long positions in stock and selling options against it, similar to the wheel trade strategy. A lot of hedge funds actually use that. Also, learning advanced options education is beneficial too, because synthetic positions are like a go-to for institutional traders. A lot of times, if they have constraints of how much outlay they can put into a volatile position, they have rules to follow. They can't just like dump a bunch of money into shares. Like they couldn't go and buy a whole bunch of FRC without having some way to hedge it. So it needs to be, lower the risk to next to nothing. So synthetic positions are exactly what that's for. You could literally go and purchase a bunch of shares, similar to what I did with my Amazon position, where I have a deep in the money put that's out 6 months or more when I opened it. a leap put that trades about with intrinsic value. Essentially, that position is neutral. It's completely hedged, and I am free to generate income selling covered calls against it. That is a hedge fund strategy right there. Effectively, when newer traders are getting hired by these hedge funds, whether they're licensed or not, they like to learn all that stuff. So our education wing is attractive to the folks over at money.net in that way, because most of their members are institutional traders. I'm going to grab a screenshot from this. That was cute. I'm going to grab a screenshot and bring it over. Hold on a second. This is awesome. There you go. Sure. So this zone here on SPY, I can't remember if I did it on a daily or 2 hour. Probably the 2 hour. There it is. Somehow I must have dragged it, but it was actually back. Maybe it wasn't a 2 hour. I can't remember what time frame this zone comes from, but it was just reading one big wick at some point. I'll find it. Give me a moment. But effectively, it's just knowing where the supply-demand zone is. And that one's kind of wide because it had a lot of range in it. Maybe it was a daily. There it is. I had accidentally dragged it over at some point, but it was attached to it's either that wick or that wick. My memory eludes me on that one, but I know it's from one of these wicks back here somewhere. Might have been this wick, and I might have changed the shape of it at some point to narrow it down. Well, they do different things on different time frames too. So I'll have short-term zones on like a 5-minute chart, 15-minute chart, 30-minute chart, whatever. And when we recognize them is the more important thing. So like here, we have liquidity in this zone here. We had a lot of limit orders that took place on all these wicks in here. So I'm essentially just marking out the wicks for those liquidity zones. But they change day to day. Sometimes they'll respect a 5-minute liquidity zone. Sometimes they'll respect a 1-minute liquidity zone in high volatility. And other times when you can go back and look at, dailies, weeklies, 2-hour charts, wherever you find a wick on a major candle, there's going to be some liquidity there in the future if price visits that area again. But yeah, it's quite wide, but it's been very nice to have that zone the past couple days. No problem. Somehow it grew. It's wider than it should be, isn't it? I might have dragged it to where it widened it at some point by accident. That's possible too. But it's still being very well respected. What's funny is I was watching a YouTube video from a guy who just analyzes general market trends, and he had a bunch of these on too, but they were not attached to anything. And I noticed that sometimes they were just kind of erroneous. But on a shorter term chart, they made sense, but on a longer term chart, they didn't. And And then I realized what he was doing. He basically took a pivot and strapped it on as, you know, a support and resistance zone, and then just built the shadow box between it. So it was just between two pivots. It didn't matter where the wicks were. For me, I just do it a little bit differently. I tend to try and follow where the wicks are, because whenever you see them, that's where limit orders happen. That's where price changes rapidly, because, you know, there are more sellers than buyers, or more buyers than sellers. So it just becomes simple supply and demand zones. And in fact, right. Yeah, oftentimes you'll see me extend them for days. I mean, I could take this little guy on a 1-minute chart and drag it across a whole week. If it's going sideways in that range, it makes sense to have it. You know, like here it's on a 1-minute chart back to a single wick right there. I'll mark that out, and I'll overlap it too. You know, it's like having a zone within a zone. So whatever time frame you're trading will be, you know, accurate in depicting where you're going to expect to find a price target, or where you're going to expect to find liquidity. And I just coined the phrase, you know, liquidity box. That makes sense. You know, it's A to B, and if it breaks from A to B and higher or lower, then, you know, it's just a matter of if this then that. So if it's liquidity, I know where those limit orders are. I know where I'm going to trade to. And we just revisited the 192, or 392, sorry. And then this Intel, that was an easy one. For individual equities, you can find those real easy on a daily chart. You can go to a 2-hour chart, and you usually find them there too. Go to a 15-minute chart for all you care. As long as you know where the buyers and sellers are going to be, you can draw those boxes. That could be where this is from too. Sometimes I don't keep a 4-hour on my quick grid. Sometimes I'll look at it. Right. So I didn't see any wicks that it was attached to though, so I was wondering, like, maybe some time frame somewhere I have that box somewhere, and I might have accidentally dragged it someplace, but sometimes I'll just borrow them too. So like if it changes on a 1-minute chart, I'll grab it and drag it to the next zone or something. It's just whatever I can get for quick price action so I can make a trade. It's relevant to me, I'll move it. Right. It's like sometimes you'll see me like go and grab, you know, existing lines and just move them over so I can use them real quick. Right. It's just right. There was a day where I found the 3 major pivots on a 5-second chart, and then I would just move them around. So I just keep dragging them down the chart, just 3 lines. So sometimes you can do that. You can do the same thing with liquidity zones. Like you can find wicks on a 5-second chart and draw those liquidity boxes and have your supply and demand down to a 5-second chart and nail it. So like you can use them over and over and over again. As long as you find about the right wick size, drag it over, it don't matter. Sometimes you just improvise and use what you got. If it's got to be moved, move it. Other times, just to keep the chart a little neater, I'll delete lines and stuff like that. Here we have a drop down to there. And I've kind of like compared some of my dope to TrendSpider, and it'll do very good fan lines. It'll focus them out from a point. But the problem is it doesn't have the freedom to attach different trend lines that are we called them. I think Stone and I called them retro trend lines for a moment, but that was not accurate either. But we would sometimes draw them backwards, so we call them retro. But you can draw them forward or backwards, and you just find different peaks and price points that you can relate to and find a trend line. And sometimes it looks random to people, but because it's like over this price and under that price, it just weaves through. So even calling them fan lines is technically inaccurate, but I call them fan lines because I know about where I can expect very short-term price action to be just by drawing them. So it kind of hurts your brain to try and overthink it, so I just don't overthink it. Yes, sir. Did I extend that one? Ah, that was here. Well, this guy right here is actually accurate, so I'll borrow this, drag it over here. Ah, my chart is a little clunky today. So my chart's a little clunky today. Actually, I go to that 5-minute candle there. Bam. You are correct there, Ricardo. That's the one we're looking at, right there. And go to the 1 minute. We'll see every tick. I almost swear Friday was named by day traders because by the end of Friday, my brain is like fried. And it's quad reaching day, so like a lot of your price action will be just kind of off today. So it's like it's okay to have a little bit of plasticity in the way you think. Right. Huh. Fits the bill. Oh, yay, scam emails. You want a gift card? Yeah, whatever. Oh, and then they called me. That's interesting. Bam. Virtual. I mean, I haven't needed to, but you know, I can always use I can always set that up with my router, which I think is already defaulted by Verizon FiOS. So it seems to for me, although I'll still get some scam emails every now and then. And then social media is kind of weird because, like, you know, Facebook is always listening to what you say. And then all of a sudden you'll get like 3,000 ads that pop up for something when you think about something. I don't know that a VPN would even affect that though, because if it's listening directly to your voice, how do you route that? Yep. I'll just say weird things sometimes, and just to see what happens. Right. Oh wow. No, that's quite rich. For me, I had one. My wife and I used to watch this show called Nip Tuck, and out of the blue, she started put crazy show, and out of the blue, she put on a couple reruns to fall asleep to. And the next day, like I've got all these ads on Facebook for plastic surgery and breast augmentation and facelift, and like, wow, yeah, craziest thing. This is kind of funny. It's like, well, you know what? If it knows what I'm watching on TV now we have some fun. So we can go watch some random funny stuff. And if it's from far enough back where there's maybe not a database to where it can recognize that it's a TV show or something, then it doesn't have the ability to filter some things. So it would seem. Not yet. So I watch these for morning stars quite often. And the way to trade them is if you're looking at a 5-minute candle, for instance, you want to make sure that body is above the body of the previous doji. So we can go bullish here, but there is a liquidity zone from yesterday here. So for me, the trade would be from the top of that zone to the 392 pivot, and that equals exactly this bar. So when you get a 1, 2, 3 setup or a 3-bar setup, your first bar is going to be the price target. You also got to know that a lot of other people are going to see the same target. So I like to get my limit order in to sell or take profit probably a few cents below the top of that bar. It's usually a pretty good trade, but if you look at it on the 1-minute chart, you'll be able to get a little more accurate entry from it. And then again with the 5-second chart, even better. You'll know exactly when to enter that sucker. But today is quad witching day, so sometimes it'll be a challenge to catch those. Right. So above the high of the body, and then you can keep your stop at the base of the body or slightly below it, and you can see it getting taken out over and over and over again on this 5-minute candle. And if you go down to a trend line, you're going to be better off, although it already wicked there. You can have your entry off the base of that, so that would be this little mini double bottom here. And you can just trade it above R1. So you're catching probably the bottom, just above the bottom half of that wick to go long, and then your stop is right on the trend line right here. So your stop would be right down here. If you got in on the break of R1 here, your stop would be just a few pennies down or a few ticks down. And Per tick, was it 1250? I think it's 1250 per tick. And the other thing that happens with these 3 bars is when they fail, you can go short real quick with the reverse button play off this double bottom, and you can trade it to the downside, and usually you get a bar spinner bar setup where it'll go, and this bar will be your measured move. Your second leg will be either a half or a full measured move, and you can see it wick to about a half the size of this bar. So you can trade it both ways, and that's what that 5-second chart's for. So if you verify that you're seeing what you think could be a morning star or a bar spinner bar, it can either be one or the other, it can't be both. You can verify the entry and exit on the 5-second chart and trade that whole thing. And all you got to do is use some fan lines. You can get to the short-term price targets. You can use the setup itself, like the double bottom here, the break above R1, went long. I always say, like, take the previous trend that led to that double bottom and start marking your pivot zones. So like you could go and find the control areas within that little short trend on a 5-second chart. So you can trade from break to resistance, and if you see rejection, you can hit that reverse button and flip that trade from a bull position to a bear position and write it down to the next support zone. Bam, right there. Bar, spinner, bar. Done. So it's like you can do it 2 ways. You can do it with just the control zones. You can do it with fan lines or trend lines. You can do it with just basic measured moves. You can go to the 1-minute chart and probably see most of that. You can see the breakdown from 392 pivot to that liquidity zone. The full bar reached that exact liquidity zone with a little wick out the bottom. So you get long here, short here, done. And the great thing, oh yeah, no, it's just like I can go and I can go and verify my 5-second trades on the 1-minute chart. I can verify my 5-minute trades on a 1-minute chart. I can go into every angle of that, back to or back from the 1-minute chart. That's why I always have it up. I'll go and flash over the 5-minute and the 15-minute, just kind of verify where I'm at for trends, long term, stuff like that. But for the most part, I'm looking for my cleanest entries and exits on the 1-minute chart, verifying exactly when on the 5-second chart. All right. I think we might see a tweezer bottom here. I was looking at IWM this morning. That's in a critical zone. It's down in that trend line, or down in that descending megaphone. It's got liquidity down here. 170 is the go no-go line if that breaks, or bear market. For IWM, yep. I looked at it on the weekly chart and found about half of this move. This was a bullish measured move. Kind of strike a red line through there, and then you come down this channel here. It already made its 50% bull retracement. This can still be a measured move, so we can get this leg repeated down here, and we could see 115 on that sucker easily. This is the pivot line, the key pivot line. Oh yeah, be nasty. And Right. So, like, this can be pivotal on whatever the FOMC does next week. Just looking at this. So, a lot of people will agree that statistically the Russell tends to lead the S&P because the Russell is, the 2,000 smaller businesses versus the S&P being, the 500 bigger businesses. So if small business is toxic, big business will be toxic because big business provides for small business. So inevitably, you can say that IWM will tend to lead the market. So you can get your indications off of, or for SPY for swing trading on IWM. I've done it before. It's kind of neat. You used to be able to collaborate those charts. Right? Right. Huh. That's kind of neat. Right. There's your regression line. Ooh, something will happen really big here because I'm about to get up and let some coffee out. I'll be right back. Whew, ended up making myself a tea. So when you see a trend line, there's one thing to know that is just a simple definition. It's a trend line. Okay, so it's a point where price is expected to do something. Like here, we can have this line here, we drew the cost here, price eventually revisited it, right? So when you have a trend line, it's an angular line, and when you refer to it as angular support or angular resistance, it does also fit the definition of a pivot, because pivots are horizontal, representation of resistance or support. So when you're trading a trend, oftentimes you will trade it in a line. So if you're seeing that price is respecting that line, you can stay in that position longer, or you can know exactly when to get out, because if you see it break out off of that line and cross another line, then you know price will resume. So like here we have an if this then that. If it bounces here, we can go long up to the next line. If it exceeds this, we know it can break down to this line. So in a sense, it's just moving support and resistance, similar to where a moving average would be. I always have that 200 period on my chart because it's significant on every time frame. Usually when price visits it, it will do something, it'll react. So like here we had it as resistance, it was briefly support, as soon as it broke, went to the next trend line. Right. Right. So when you take that to Stone's logic, there's a simplicity to it. All channels break, all consolidations break, all ranges break. So when they do break, how do you find where you expect them to break and go to? That's what these retro lines do. They give you an angular representation of where you can expect price to have some sort of reaction. Oftentimes you'll find me changing colors too. So like if I have a channel, and back in this channel this was the angular support, this became a regression line. So I'll make it stand out. I'll paint it white. I don't have to, but for my purposes, but to represent it to you, I'll paint it white because it's significant. So when I have these segmented lines outside of that channel, it's just a representation of where price is expected to find the next reaction. And then to boot, I'll have pivot lines. So if I have a channel, I know that there's a high probability of a 50% retracement of this entire channel from A to B. So if I just grab a horizontal line, I can represent that with a simple pivot. So if the channel breaks, I know there's a good probability of a 50% retracement. This becomes my ultimate target. And I found it two ways. I found it with a generalized idea, just to kind of eyeball it where about halfway is, draw a horizontal line. Or if you find that you can find some commonalities where price found a support on an angular, you know, it met the bottom of the channel here, it exceeded a little bit, met the regression line here, and then it had a break over here, had a bar up to here. Anytime you see that price respects this line, just drag it outside the channel, and it becomes a very quick way to find a price target. But look, the 50% line and this angular come to the same place. It's just two different ways to find a price target in one. So when you find these, you can base probability on these a little more efficiently because it's got a much higher probability of meeting that 50% retracement if it has two ways to get to the same price point. Right. Exactly. Measured moves are everywhere. So whether it's a retracement measured move or the channel itself is a measured move, usually just like that ball bouncing off the floor, and you know where it's going to be when you want to catch it. It's just a simple reaction. It's simply instinctive. So when you're seeing these things instinctively, traders will go there. So this is where, whether it's an algo that's based on human examination of price action or people manipulating this price, typically this is where instinctively they will go. Right. So what's also cool about these retracements is oftentimes price will bounce off of them. So like, you know, this can give you a quick breakout trade. You know, you got your little micro double bottom here off that angular. You can run that A to B, and when it rejected here, there's one reverse button trade here, and then you can either close it or reverse it again here. I would have probably closed it here and re-entered on the break for long because I know where the bull target is for the 50% retracement. And then here I can flip this again with a reverse order at that bull target because typically 50% retracements will rebound. They will come down and consolidate. So it's just a simple thing of learning what price action has a high probability of doing, figuring out where those targets are, and then just literally letting your instincts do the rest. Because once you've trained your brain to recognize this stuff, all the lizard brain needs to do is react. So your dope does the predictions for you. You don't try to use your lizard brain to predict anything. That's where you got to find that patience to watch for the right setup and take advantage of it at the right time. Then one other thing to note here. This is a rounding bottom until it's a bear flag. So you've got, you know, if you were to draw on this freehand, you would be able to connect the dots, and this would be rounded at the bottom. So sometimes rounding bottoms will fail and it'll become a bear flag. This can look like a pop and drop bear flag. If it breaks, we know where it's going, 388. That's a half leg. So if you look at the peak down, half leg extension off of this consolidation would be 388. Where's the full leg? Angular back to the top of our diamond pattern, 380, 650. Yep, right on the 1 minute chart. So if this doesn't reverse here, we know where it's breaking to. Trying to figure out what's going on here. I think FRC is waiting on this zone. That's where the liquidity is. They want it at 25 for a moment, but if they can't hold above this line on top of that top edge of that 25 and a quarter, down she goes. There's your line. Oops, I dragged the whole damn thing. Sorry, whenever there's high volatility on Webull, it is a drawback. It becomes a little bit clunky when it's overwhelmed. I don't know if it's my machine or if it's the app itself, but my machine is like not even using 20% of my CPU. Not even a quarter of my memory. Ethernet speed's well within range. Graphics card isn't being pushed at all. So I'm thinking it's the app or the data. Yeah. Oh, like secondary indicators and stuff. Right. Right. That is kind of weird. I mean, I optimize my PC performance by going into BIOS and making sure that the memory is unlinked for that purpose, because it can run multitasks in that same compartmentalization method. Depends on what motherboard you have, but for the most part, just go in your BIOS and go into your RAM settings, and it's also important to, if it's not automatically set, kind of match the speed. So like if the RAM is capable of higher speed than your motherboard's capable of, you can only peg it out. But if the RAM is not as capable as your motherboard, you have to limit it. Right. All right, it's the last chance for romance on that support line. Pardon me. No, you did fine. I mean, it's kind of a plastic definition anyway, because it has some fluidity to it, some give. There's a fudge factor in there. It's like you don't have to be dead on with these things. You just have to be close. Like here's an interesting one right here. And this is going to be a little short-term descending megaphone, I think. There's your regression. But if it breaks over here, this is going to be bad news bears. We're going to retrace every bit of yesterday's price action down to 388 and then possibly down to 386. I heard Aaron. Hey. Mm-hmm. So when I'm making a trade decision, the regression line serves two purposes. One, it's kind of a if it goes through it point, you can go bearish, or if it bounces off of it, you can go bullish, sure. I'm being a little more patient with them though, so when I notice that there's a range expansion or megaphone pattern, if you will, with a regression, I know that typically I can get a 1-for-1 based on that regression line bounce to the angular resistance. So if I'm trading, I'm going to trade the break of the resistance here, and I know I can get a 1-for-1 outside of this channel. There it is right there, 1-for-1. So if I miss this entry here, I can be pretty confident in taking this little scalp here. And almost every time you see a channel or a megaphone break, I'd say about 90% of the time you'll get that 1-for-1 outside the channel. So like even an example here on FRC, which is just volatile and nasty as I'll get at, that's probably beating a lot of traders up today. You know, you got this channel, and although we didn't have a regression line in this channel, there's your 1-for-1 just outside the channel right in that bar. But if you look at that on a 1-minute chart, you'll probably see it a little easier. You got move to move, came down, tested it, move to move. So you can scalp that little double bottom based on what you saw before on that channel. Most of the time you can eyeball it. Other times, like we do with the fan lines, we can get to the same place just by drawing an angular. Let me see if I can find it. There it is. So like we can find the start of that channel. We can whip across this point right here where it touched the top of it. And we can set a base out target right there. So there's your 1-for-1 right there. Here to here is about the same as here to here. Yeah, I mean you can go, you mean across the peaks and stuff? You can do that, but most of the time I try to stick to candle bodies if I can. This is ridiculously volatile, so it's like there's enough chop there where you kind of have to use your eyeball to average it, or at least find something in common with it. But since it broke over really cleanly right here on the edge of that channel, I can line it across there and use the moving average as kind of a reference point. That works. And then, you know, coming outside the channel to prove the thesis, it was just simple as finding this height here. And then the odd thing is, when they do reject, you'll get a 1-for-1 going the other way too. So like here we had a breakover. If we kept this line in motion here, this would be a good point to short because you get a 1-for-1 going down. So it's like you can get pretty high quality, pretty high probability setups just on a fan line, or just on a channel and a fan line. And there's other ways to do it too. You can go and put your horizontal pivots into wherever the price point of control are, you know, highs and or open and close of full bars, stuff like that. You can be pretty accurate with that too. It just gives you a variety of things to do to verify where the price is going to go. And then if you put them all together at once, you'll start to recognize that probabilities, when you converge all those lines, are pretty high. Right. And it's going to take repetition to, do it any given way. So whether it's my way or your own way, it's going to take repetition. So like if it doesn't make sense to you, draw what you think is on there. Figured, on base with previous encounters, pick a line. Just basically find the commonalities in price and draw it across. So when you draw it yourself, it'll make more sense to you. And whether it's a combination of what I'm showing you or if it's an exact match of what I'm showing you or anything like that, repetition of recognizing those is where you're going to have the biggest takeaway, the biggest gain. And that's what's great about the 5-second chart, whether you're trading it or not. Mark it out, get that practice. It teaches the brain what to look for, and then once you get that instinctive ability to recognize these, it's simply just letting your lizard brain react to it. It's just a simple reaction. It doesn't need to predict. There's the rest of that rounding bottom. We're crossing the threshold. So bulls will have a target right up to the base of that liquidity zone, about 390.70. I probably wouldn't trade that. I can see there is a 1-for-1 here, but the probability is a little low because this is the only reference line I can put on it aside from this. You can go this guy here to here, which it's met. So that's not going to be the cleanest 1-to-1. I know where liquidity is, but I don't know where the break's going to be. I know that this is also a key pivot on my 5-second chart based on previous encounter where we went A to B. I ended up dragging that line over actually. It should be back here. And I see a narrowing wedge here too, so I don't always trust wedges because the 60-40 rule applies. Well, I don't like those odds until I see the break. When I see the break, I'll know where it's going. It's as simple as drawing a line here. That just barely gives me a 1-for-1. So when you see a consolidation, you measure the high and the low. When it goes into a consolidation or a range momentarily, usually you'll get the height of that range of that consolidation in the break. So as you see one here, you get one here. So 1 to 1. And most of your institutional traders are going to be ignoring the 1-for-1. They want the 2-for-1. Market makers and institutional traders always prefer to trade a 2-for-1. So how do you find a 2-for-1? When you see the channel, you've got A to B, you get your 1-to-1 here. Well, where's your 2-to-1? When it comes back. So here we have a 2-to-1 trade. Based on, there's your 1-to-1, back to it, 2-to-1. Right. So when you realize what most of the institutional traders and market makers are doing, they're looking for that 2-to-1 more than the 1-to-1. But if you're quick enough and you're not trading massive size where it can take too long to fill an order, you can trade them both. So I can go and scalp the 1-to-1 all day long. When I see the 2-to-1, I'll recognize it and I'll leave it on for a 2-to-1. Bam. So probability was low, but it did break it. It did give us a 1-for-1 right to liquidity. kind of a unique way to look at it, but it dumbs it down to make it so simple. And like I said, the hardest thing to do is to be able to react accurately to it. That is the part where you're going to be taking a lot of time practicing repetition before you get it. And when you get it, man, you're going to kick yourself. You're going to be like, what the hell have I been doing with my life? Why has it taken this long to get this? But when you do, man, it's just like the light comes on, like, aha, I know what to do with this. And then you just trust your lizard brain and do the do, you know? It's just that repetition. The method is something you have to build yourself. Like I can't teach any one method that's going to work for everybody. It's going to be individual. But the curriculum of learning, being able to train yourself to recognize what makes sense to you is going to be where that method is developed from. It can't be just developed based on the curriculum. You can't really do that in this. It's got to be organic. It's got to be yours. It's like I can show you, 5 different styles of finding price targets on one chart and make it look as confusing as hell. But when you recognize the simplicity of it, that's when the lights come on. So it's like then you start to develop your own method, whether you use one of them, 2 of them, you could use all of them, whatever. It's going to be what works best for you. All right, 1-to-1's been had. Coming back for a 1-to-1 bear move. Probably going to find support here. And if this, then that, we might get a 2-to-1 retracement back up to angular, or we might get a 2-to-1 retracement back to support. Let me just draw another fan line. Right. Well, it's like so if you realize that that's all the market really does, it makes it easy. You can use Stone's method where you just draw boxes. You don't need any lines. Literally just draw these boxes. There's your 1. Stack it. There's your 1-to-1. Yep. So once that light bulb comes on, that's yours. you know. That's it. Yeah, you can drag it anywhere. Once you know the size of the move, you can do the 1-to-1s, and you can find the 2-to-1s. Just add another box. See, it works for you. Yep. Oh yeah. And it's just once you get that, I mean, learning all the moving parts, how moving averages work, how secondary indicators work, how price action works, how the options work, that's very important. But it always comes back to something simple. You can just take and filter all that crap out and focus just on the price action. And then once you have all the understandings of how the big machine moves, the little parts will make more sense. So if you want to just scalp a 5-second chart, you can do it all day long. You just find those 1-to-1 and 2-to-1 moves. If you want to scalp a 5-minute chart, the same thing. You're just going to find the moves. You're going to find the 1-for-1, 2-for-1, and trade it. Like you said, you can have a deep stop on a 5-minute chart. You're going to have a sizable account to do so. And the interesting part is I took a bottom-up approach to trading where most people took a top-down approach. By that I mean most people started with like 10,000, 20,000 in an account, whatever it may be. Some people 100,000. They got a trust fund or something, and they go and they spend a lot of that in loss trying to learn this stuff. Whereas I went and developed a system that worked based on simplicity at first, and I built all the skills to get the complexity of it along the way, but the principle never changed. The simplicity was always the easiest format to follow to consistently make profits. And the learning of how to control loss, how to manage that, and how to train my brain to react to things when they happen instead of trying to predict them, that made the difference between whether I could keep that return that I was generating or give it back. And fundamentally, I can go and do all this stuff simultaneously. So like I can go and scalp this 5-second chart for a living. But then when I get a much bigger account going and I have a lot more size, those orders don't fill so snappily. Sometimes it'll fill a few contracts at a time or a few shares at a time depending on what I'm trading. And you can't trade with that much speed and efficiency on a 5-second chart with a large amount of money. Could you imagine a hedge fund trading like 1,000 lot of ES contracts at a time, trying to get in and out on a 5-second chart? Impossible. They would literally make the market move. So you go and take that same logic and apply it into having the ability to do both, to take your larger amounts and let them trade passively on basic price action, but utilizing different vehicles. Like I'll use the options income for that. I can run that policy in the larger amount and then use the smaller amount to day trade the short-term charts. So I can slowly build income on the short, choppy day trades and then accumulate that into something that can be still working for me with my options trades. There was a nice 2-for-1. And look. You too, man. And happy St. Paddy's Day if you're celebrating. Yeah, no problem. I'm going to grab something to eat, and if I have time, I'll give myself a quick shave so I can go on camera. Talk to you later, man. Yeah, it's been great. We'll see you guys later. And again, be safe, be happy, and trade responsibly.